This is video 3 of 8 covering the Chapter 16 concepts in the Primary Study Guide for Exam 2. This one begins at the top of page 4 in the Primary Exam 2 Study Guide, and we'll go to the end of page 5. This starts the Chapter 16 content. Chapter 16 is a continuation somewhat, or it builds upon Chapter 15. 15 was about job order costing. Chapter 16 explores another cost accounting system called process costing, whereas job costing was used to account for the cost of goods that are unique or highly custom. Process costing is how we assign cost to goods that are more similar to one another, basically goods produced in more of like a traditional assembly line or mass manufacturing context. This particular chapter, you're going to have 5 multiple choice questions in it too. 5 at 2, that's 10 points for multiple choice. The written question will be worth 15 points. It, like all other chapters in this exam, is worth a total of 25 points. As to the multiple choice, you want to be able to define process costing relative to like job order costing, particularly how standardized is it, how what's the production volume look like, what is the nature of the products that we use process costing to account for. You want to identify examples of when we would use process costing or job order costing for certain products. Or you want to identify examples of products that we would use process or job order costing for, rather. There should always be a clear answer that is clearly more suitable, more likely to be mass manufactured, so process, or obviously more likely to be customized, so job order. Define equivalent units of production, know how to do the production cost report, and use it to calculate and answer questions about EUP, cost per EUP, the cost assigned to completed and transferred inventory, and ending work in process inventory for a particular department. Know how to do the journal entry given the production cost report information. Know how to do the journal entry to record the transfer of goods from one work in process department to the next work in process department. Let's go over the conceptual guide here. This will go over in more like the problem application section of this chapter. These we should touch on in this video and in these pages. Conceptual guide, define and or describe process operations. So process costing, you've got mass production of highly similar, maybe even identical products. Basically, this is the mass part of mass manufacturing. I make a lot of them, so it's high production volume. That is mass. I can do that because if I'm making the same thing over and over again, highly similar products, I can standardize my processes to automate a lot of it. And because I can standardize it and be really efficient, I can make a high volume of products. I can make a lot of units, basically. That's different than job order, where everything is custom. And because it's custom, it's hard to standardize. And because it's hard to standardize, I'm not really efficient, so I can't make as many of them. So if you want to summarize this, I make a lot of highly similar products, and because they're similar, I'm better able to standardize, which makes me more efficient and effective at manufacturing, which means I can produce more units. That is what they're calling production volume. Describe how inventory flows through process operations. So basically, raw materials, then direct materials from raw materials, direct labor, applied overhead goes to work in process for each department. The goods flow through each individual department. Every process has its own work in process account. That is under process costing. After it leaves, say that that was the final work in process or the final process on the line. After it is completed in that final process or final department, it goes to finished goods. And then once it is sold, we expense it. So from here all the way to here, it's an asset as inventory. When it's sold, it is expensed as cost of goods sold. Note the multiple work in process accounts. You account for them just like you would any other inventory account. They're assets, so you debit to increase, credit to decrease. Okay, define equivalent units of production. Keyword here would be equivalent. Basically, it's not saying that it is exactly the same or that it is equal or that it is this thing. It is an equivalency. It is not the units that I actually produced. It is equivalent to those units, meaning it is more theoretical or hypothetical in nature. So it is specifically the number of units that could have been, keywords, produced given the cost incurred in the period. Basically, how many units worth of direct materials cost did I incur? How many units worth of conversion cost have I incurred in the given period? It's basically how many units are reflected in the total cost. It is an equivalency. It is not the exact number that was produced in total or in whole. You're basically trying to just figure out how many units worth of the cost you have, not how many actual whole units you've produced. Key phrase, that could have been. It is an equivalency. It is not an actual number. It is hypothetical or I guess more theoretical. Okay, so just pay attention to the language. This is a journal entry for direct materials. On 115, ABC used $500 of raw materials in process in Department A and $300 in Department B. If I know what process they're going to under process costing, I can tell you that this amount's going to A, this amount's going to B. Then these under process costing, because we allocate cost at the process level, we're assigning cost to the process. If I know what process to assign it to, then it's going to be direct materials. Direct materials increase work in process accounts for each of those departments. I add them to those work in process accounts for A and for B. That's an asset, so I'm increasing an asset. I would debit each of those accounts for the work in process for each department. And I'm using raw materials, so they're no longer unused in storage. I'm decreasing raw materials. So decreasing an asset, decrease an asset, I would credit. So I'm going to do these separately. Let's do the 500 to A first. Add it to Department A. It went to Department A, so Department A is increasing. Got it from raw materials. Raw materials is decreasing, so credit raw materials. I'll show you some in Department B. $300. Also got those materials from raw materials. Alternatively, you could have said work in process Department A, 500, Department B, 300, and then just credited raw materials one time for 800 in total. That is up to you. I would suggest you doing them separately. It's just typically easier. On 128, ABC used $1,000 of direct labor in A, $600 in B. Assume the wages have not yet been paid. So this is direct labor. I would add that to each of the work in process accounts for these two departments. Increase assets with debits. Anytime we've got direct labor or materials, debiting a work in process account. I've not yet paid the wages, so I'll have to pay wages later. That's an increase in a liability called wages payable. To increase a liability, I credit. So let's do them separately. You're adding the direct labor to A first. Wages payable. Add it to B. Owe wages for that as well of 600, so credit wages payable. If I see direct materials or direct labor, I should always be debiting a work in process account. In process costing, though, I've got to be specific about which one. Journal entry to transfer $300 in inventory from Department A. So it is going from A to B. So it's leaving A, so A is going down, going to B, so B is increasing. Each of these have their own work in process accounts. To decrease an asset, I need to credit. To increase, I need to debit. So I need to debit work in process, Department B, and credit work in process, Department A, to decrease it. I complete inventory costing $750 in the final department, Department B. So I've completed it, meaning it is finished. It is going from Department B, which is the final department. If it is complete in that department, that means that the next place it goes is finished goods. So it's leaving Department B, so decrease that asset with a credit, going to finished goods, so increasing that asset, finished goods, I would debit it. So debit finished goods, credit work in process, Department B, for the $750 in inventory completed. Okay, 16-1, process versus job order. Identify the examples. Basically, if it is process, you're looking for something that is mass made. Job order, you're looking for more unique, custom, tailored to the customer kind of goods. Beach towels, I would say that's likely to be mass made, so process. Bolts, likely mass made, so process. Lawn chairs, mass made, so process. Same thing with headphones. Custom patio, that's a key word. I'm tailoring it to the customer so it's unique. That would be job order. Door hardware like hinges, doorknobs, locks, those are likely to be mass made, so process. Financial statement analysis, I would have to tailor that to the company I'm analyzing. To what the customer wants to use the information for. so on and so forth. I would tailor that to the company, to the customer, to maybe even the environment. Basically, it's custom, so it would be job order. Paint cans, likely mass made, so process. Custom home, so it is custom made, so job order. Note, you would also see words like luxury. Both of those things are indicators that something is going to be job order, accounted for using job order costing. Okay, that is the end of video 3. We will pick back up at the top of page 6 with video 4, in which we'll cover the chapter 16 application problem type questions.